All right, guys, hello. Let's go over the quarter 4 earnings for Rocket companies. Um, Here you can see their net income is up to 865 million from 754 in 2019. Now, note the change in 2020, right? So from 2019, we're at 754. 2020, we're at 2841, and then 2021, we're back to 864. So part of this is because Rocket Companies has only gone public recently, so they changed their accounting style. Also, there's some sort of one-time expenses that are thrown in there. So it's kind of, yeah, it's very difficult to interpret this number or any of these three numbers in a super straightforward manner. So we'll have to dig in a little bit more there. Interest and amortization expense on non-funding debt higher in 2021 than in 2020 or in 2019. Income tax provision, yeah, not big numbers compared to net income. Depreciation and amortization, not meaningful compared to net income. Non-cash share-based compensation expense, pretty consistent between 2020 and 2021. Both are quite a bit higher than 2019. Part of that is the acceleration in their business. Another part of that is just the process of going public. Change in fair value of MSRs due to valuation assumption. These are, I would say, yeah, I mean, we've had a lot of sort of interest rate volatility between 2019 to 2020 and then back to 2021. So that would probably account for most of that. Adjusted EBITDA, again, hard to compare these numbers. Let's go in further here. Total revenue also down in 2021 versus 2020. Change in fair value of MSRs, again, adjusted revenue. Yeah, one of the things that's sort of unfortunate is that they don't actually give a ton of information in their release here. They put out this, 40-some page presentation, but the majority of it is actually focused on their company's long-term sort of positioning and where it's almost like a pitch deck for a startup. I'll show you what I mean in a minute. But yeah, they shoved essentially all their financial information into the end notes. So net income attributable to Rocket companies. In 2019, we don't have a number there. 2020, 140. 2021, 48. So again, we have a decline there. And I would assume like a significant part of this is going to be just due to the fact that Rocket Companies has only recently gone public, and so that, together with some changes in accounting, has really made this not a straightforward thing to interpret. Tax affected net income, same issue. Let's try to dig in, see if they cover more of why this varies so much. Okay, so we already have a loss on extinguishment of senior notes. So we have a loss on some debt. That is part of it. We need more numbers though to add up to here. And they don't provide that here. So let's go back to the beginning of their presentation here. Sorry about that, guys. Let's try this. All right, there we go. So yeah, here's the information that they put out. As you can see, 47 pages. Most of this reads like they're a startup. Part of that, I'm sure is just because they've recently gone public, but still, I would have appreciated a bit more financial information. Even in the earnings call, they didn't provide a ton of more detail on the finances, which is odd for a finance company. They prefer to see themselves as a fintech company, but obviously their business is a finance company, even if it has some technology aspects to it. So let's see. Let me pull out my notes for the most interesting parts here. So one thing, Basically, if you're not familiar, Rocket has a bunch of different sub companies, right? So there's Rocket Mortgage, Rocket Homes, Amrock, Rocket Auto, Rocket Loans, Truebill, Lendesk, Edison Financial, Core Digital Media, Rocket Central, Rock Connections. They have a whole bunch of consumer finance and consumer like fintech brands. And Rocket Companies is sort of the holding company for that. The 5 sectors that they advertise themselves in are mortgage, real estate, auto, financial services, and solar. Um, Homes is really the thing that they're biggest in, the thing that matters the most to their business. We go to this share, right? This is a very interesting slide because it's just showing like market share of category leaders in different sectors. Rocket Mortgage is pretty small. It's below 10% in the mortgage business. So, and you compare that to like retail brokerage, right, which is also a financial service, but there's a significantly higher concentration. This is very interesting because it means that there's a lot of room that they could grow, and that's especially nice because if we go forward to slide 29 here, you'll see this, right? So long-term mortgage share and share gains. Here you have the Rocket originations and loan numbers. You can see that we massively spiked up, right, in 2020 and 2021. This is a combination of like pandemic, people moving, buying more homes, low interest rates, buying more homes. And it's unclear whether this is going to pull back. I sort of thought it would have started pulling back right now. It hasn't quite started doing that yet. But if it does, that could sort of be a macro drag on Rocket's business. However, it is not necessarily as big of a drag as you might think because of the slide we were just looking at, right? This slide. So because Rocket right now is such a small percentage of the mortgage market, it's possible that growth and adoption of Rocket Mortgage in particular might outpace any decline in mortgages overall. That would be sort of the best case if some sort of problem were to occur. And again, it seems plausible that that might happen because not only is this showing that there was a spike up in the amount, but over this entire last 12 years, the percentage of the mortgage market that's been Rocket has been just climbing pretty steadily. So I'm a bit hopeful that like even if the economy did pull back and mortgages overall slowed a bit, I think Rocket could probably hold on and outperform the mortgage market in general. Also, if you guys are not familiar with the leader of the founder of Rocket Companies, is a really interesting guy from Detroit who has a solid work ethic and has really like built his company on a foundation of integrity, which I really like. In the finance sector, it's always like really tough to vet the details of a finance company because you don't know the quality of the loans. You don't, it's really tough to gauge what they are. That was part of the reason coming up to the financial crisis why so few people realized what was going on is because it was hard to tell what was going on, unless you have access to the balance sheets or not more than just the balance sheets. You have to have access to the underwriting profiles. And really the only way to, have any sort of confidence in the finance company without all of that information is to know that the finance company is run by people with very high integrity. And Rocket Company I think, is that. So that is a very positive thing in my opinion. However, I do still wish that they gave us more specific finance information. Other than what I've shown you guys so far, there is not really a lot that they have. Basically the rest of this presentation is, it's basically like a startup pitch. Your proven track record, here's their leadership, here's their culture. That's good. Culture is a foundation, but be nice for have some more details. They give us these financial highlights, which is nice. You can see closed loan volume steadily growing 2019, well, not steadily, more than doubled to 2020, and then a slight increase to 2021. Net rate lock volume, similar from 2020 to 2021. Gain on sale margin, roughly steady, a little bit peak in 2020. Amrot closings, growth across the board. Rocket Auto sales and units, that's growing pretty rapidly, so that's nice to see. You know, maybe in the future Rocket Auto will become comparable to mortgage. Probably not. Probably mortgage will always be the primary revenue driver, but it would be nice to see auto definitely grow and become a strong secondary revenue stream. Adjusted net income, you know, again, we have this very odd drop here, despite the fact that the loan volume is up. And, you know, I don't see a whole lot of information about, you know, even what their expenses are, right? Like, this is very limited profile here. So they will put out a 10K, which I don't think they have put out yet. So, although I think they actually might have gone public last year, so they might be exempt from that for a while. In any case, when we have more information, I will update you guys. That's essentially all we know for now. Thanks for watching.